Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 6th of March 2016 and we're covering the US non-farm payroll report published last Friday and its implications. Quoting the report issued by the US Bureau of Labor Statistics, quote, total non-farm payroll employment increased by 242,000 in February, and the unemployment rate was unchanged at 4.9%. Employment gains occurred in healthcare and social assistance, retail trade, food services and drinking places, and private educational services. Job losses continued in mining. Over the year, the unemployment rate and the number of unemployed persons were down 0.6 percentage points and 831,000 respectively. Among the major worker groups, the unemployment rates for adult men was 4.5%, adult women 4.5%, teenagers 15.6%, whites 4.3%, blacks 8.8%, Asians 3.8%, and Hispanics 5.4%, showing little or no change in February. The number of long-term unemployed, that is those jobless for 27 weeks or more, was essentially unchanged at 2.2 million and has shown little movement since June. In February, these individuals accounted for 27.7% of the unemployed. The employment population ratio ended up to 59.8% over the month, and the labour force participation rate edged up 62%. Both measures have increased by a half percentage point since September. The number of persons employed part-time for economic reasons, also referred to as involuntary part-time workers, was unchanged in February at 6 million and has shown little movement since November. These individuals, who would have preferred full-time employment, were working part-time because their hours had been cut back or because they were unable to find a full-time job. Employment in mining continued to decline in February, down 19,000, with job losses in support activities for mining, minus 16,000, and coal mining, minus 2,000. Since a recent peak in September 2014, mining has shed 171,000 jobs, with more than 3/4 of the loss in support activities for mining. Employment in other major industries, including manufacturing, wholesale trade, transportation and warehousing, financial activities, professional and business services and government, showed little change over the month. In February, average hourly earnings for all employees on private non-farm payrolls declined by 3 cents to $25.35, following an increase of 12 cents in January. Average hourly earnings have risen by 2.2% over the year. In February, average hourly earnings of private sector production and non-supervisory employees were unchanged at $21.32. The change in total non-farm payroll employment for December was revised from plus 262,000 to plus 271,000, a 9,000 increase. And the change for January was revised from plus 151,000 to plus 172,000, a 21,000 increase. With these revisions, employment gains in December and January combined were 30,000 more than previously reported. Over the past 3 months, job gains have averaged 228,000 per month. Unquote. Undoubtedly, this is a positive report, in excess of predictions by economists, and caps 72 months of uninterrupted job gains, the longest streak on record. It comes as stock markets in the US and abroad have been rattled by fears of a global slowdown, sparked by worries that China's economic boom is slowing. US businesses have now added 14.3 million jobs over 6 years. The unemployment rate is half what it was at the height of the recession, and the December and January figures adjusted upwards. The unemployment rate for the country overall was 4.5%. Those rates did not change during the month, nor did the number of long-term jobless, still 2.2 million people. On the downside, Americans' wages declined 0.1% from the prior month, putting the annual gain at just 2.2%. And while job growth was better than expected, the major gains were in low-wage industries. The report comes as the Federal Reserve weighs whether to delay a further rise in interest rates. The recent rout on Wall Street, due in part to economic woes in China, has been a major factor in the Fed's decision to hold off on a further increase, Fed Chair Janet Yellen told Congress last month. Paul Ashworth, chief US economist at Capital Economics, said, quote, "With employment rising at a rapid pace and labour market slack still shrinking, we think the Fed will resume raising interest rates in June. A marked pickup in wage growth is still notably absent, but that won't matter to the Fed when there are clear signs of a rise in core price inflation." Unquote. Announcements by central banks concerning negative interest rates have also caused nervousness and money flows into gold and silver, particularly the former. We certainly do not see interest rates rising before June, and would need to witness another month or two of increased employment and improving trade balances before we would even suggest that they will rise then. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati Silver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.